Hey everyone, we're going to dive into FTM today as it's been one of the biggest movers during this crypto rally in 2023, and I want to let you know the key levels both above us and below us and where you should be buying and where you should be selling. So if that sounds good to you, go ahead and like the video, it costs you nothing, and subscribe to the channel as well to keep up to date with all my videos. So let's get straight into it. So let's take a look at some of the upside targets first if we break 65 cents. So we know that markets like to move in waves of 3s and 5s, and if we are going to see a 5th wave here and the 4th wave is already in, the most likely target that we're going to approach is going to be somewhere between this horizontal resistance level above us at about 90 cents to $1.10. You can see that historically on the chart, this is where we have seen the most obvious levels of price rejection, okay, and price support. So this is going to be a key area for FTM if we're able to reach there. And you can see that we've currently stalled at 66 cents, 65 cents at this key order block over here, because during the lunar collapse, you can see that we basically created a massive just void and gap to the downside. And like I said to you before in my previous Bitcoin videos, when we see these voids in price that never get retested, they're almost like CME and stock market gaps where they almost always tend to get filled. So we've literally just filled that gap over here. And we do have almost, if you can just have a keen eye for this, another gap over here, which will probably retest at some point or revisit in the future, maybe this year as well. And that's coming in at about 90 cents. And you can see that where we've stalled out is actually just a retest of the big distribution pattern that we broke down from earlier in 2022. And this is causing a significant amount of resistance for FTM, at least in the short term. And you can see that if we bring out our Fibonacci extension tool, you can see that the extension of this main wave down the bottom here, okay, has been pretty much really nicely touched at the 2.618, which is where we're stalling at the minute. And you can see that the next most important Fibonacci target, the 3.618, okay, is again coming in at about $1.10, about $1.05, and you can see that is again confluent with this horizontal support resistance area. So I think that if we make a run up here, we could definitely see some sort of parabolic move if we're able to clear 65. And the reason as well that it's going to be quite a violent and parabolic move is if we actually take a look at the volume profile. And you can see that if we bring up the VPVR, we also have a low volume node over here at about, again, where is it? 90 cents to about $1.10. And this whole area is probably going to be quite a violent and volatile area to trade, because we know that the FTM, okay, is not likely to stay at these levels for very long, because whenever you get these voids in price with the VPVR, it's telling you that no one likes to do business there. So what you tend to get is you tend to get spikes into these low volume areas, okay, and then it basically tends to coincide with a high level of supply, okay, and then you can start to potentially look to deviate back down, okay. So that will be my upper targets for FTM if we actually manage to reach there. Another thing that I want you to bear in mind, if we were to get this move to the upside, which I will say I still don't think is the most likely outcome here, okay, is that if we tend to consolidate here, okay, and we start to form a larger consolidation pattern, okay, and we start to consolidate maybe for the next 4, 5 weeks, 6 weeks even, okay, remember that consolidation precedes expansion. So the bigger the consolidation, the bigger the bull flag, okay, the more likely you are to basically find buyers and move from this level to the upside. So the smaller the correction, okay, the less likely we are to just shoot straight up to this level. So if you start to see consolidation here and we start to see bullish signals in a few weeks time or in a month or two, and then we start to move higher, this is going to give you, this sort of pattern is going to start to give you higher degree of confidence that we can actually have the energy to move to about $1 for FTM. And one of the main reasons that I think that FTM has a very good shot of reaching $1 this year is that you can see that the 0.236 has not even been hit yet. Where is that? It's about at $1, okay? And these levels tend to get hit eventually, and you can see that we're at least trying to create market structure, okay, where we're creating higher lows and breaking some key highs over here, okay, for FTM, where we're starting to change the structure of the market. So even if we come down here and we move further and then we start to consolidate, okay, like this, and then potentially move up, okay, again, look, the 236 is an area where we're likely to hit at some point in the future. So this is why you need to mark these levels out on your chart ahead of time. And we can see as well that the main order block that we finally broke down from in this head and shoulders distribution pattern back in 2022, 1 year ago, begins here at $1.05. And you can see again that the level, okay, we're looking for those green candles, which are the green candles before the down move in market structure, which is the areas that we're likely to tag. And where is the first, you know, down, the first up move, okay, and the first green candles before we broke the market structure is again here at about $1.06. So this is the key level for me for FTM if we're to move to the upside, and you can see that is clear and confluent as well on the weekly chart. So you can see here these green candles, which form some consolidation here and was the last stand for FTM, which was at about $1.10. So that's the level that you really need to keep in mind. And again, we spoke about voids in price. You know, I would not be surprised for this area to get tagged into, and if we, you know, break into 90 cent, easily we could see spikes of like 10 to 15% into these levels and then sharp corrections back down. So that's what I want you to be looking at. That said, bear in mind that FTM has pumped 4x since the start of this year, making a 300% move, which is absolutely monumental. And you never want to be FOMOing into an asset after it has appreciated about 4x in about 6 weeks, especially altcoins, as they can burn you pretty harshly. But no doubt we are currently holding support. So we broke through this level, which was the 41 cent level, and you can see that we broke that market structure, which is very positive, and we've come back to retest this exact level over here, okay, at about 43 cent, which we have supported earlier in this week. But if we lose this level, the main levels that I want you to look for down below us are going to be these pivot points here, which we've seen areas of price action from FTM in the past. So definitely 30 cent is going to be an area to watch out for. Also in the 3-day chart, you can see that it's the last red candle, okay, before the up move that broke the structure of the market, which took us from 30 cent to 60 cent. So definitely an area that I think is likely to get tagged before we break 65 cent, in my opinion. And remember, a lot of these markets are dependent on Bitcoin. So if Bitcoin does see a further correction down to those lower 20k levels, possibly even 19k levels, of course it's going to drag the market down with it. Interestingly enough, that key order block at about 30 cent is coming confluent at about the 618 level for FTM. So, you know, somewhere between the 618 and the 7.86 is where I like to add into pullbacks to try to join an uptrend. So like I said, where are the order blocks down below us that we can see? Okay. Again, we're going to outline this level over here, okay, which is actually still within this order block, okay, which is the red candle, okay, before the up move that breaks the structure of the market. So I would imagine that this is going to get retested this year, because I still think this year is likely to be an accumulation year for a lot of altcoins and Bitcoin, and some of these altcoins I still think are going to make new lows this year, because I don't think that it's necessarily that easy and we're just off to the races and the altcoins are just going to all 10x from here. So like I said, just be aware here that we've got some lower levels which we can tag. Looking at some of the shorter time frames, if we are to move above 65 cent, okay, I want you to outline some of these levels down below us. Just over here on the 12-hour, you can see that if we do take out this 41 cent level, where is the next order block down below us that we haven't tested yet? It's going to be this level, okay, so it's against 35 to 30 cent. So on the shorter time frame, looking at some of the levels down below us, if we are to have a really bullish and impulsive move, we have a clear order block over here, okay, on H12, which is the 12-hour. So if we come down, I would expect this level to get tested, at least if we're going to take out 65. I don't think we go straight up from here. This is a possibility, and then off to the races. Okay, if this happens, okay, or you're bullish on FTM, you should be looking for levels and laddering in over here. Okay, and like I said, when you're looking to add into key order blocks to join uptrends, you're looking to join at somewhere between the 618 and the 718, and you can see that really nicely here this order block starts perfectly, which would meet the criteria for a long trade. So a 618 and a 7.86 here would fall somewhere between 48 and 45 cent, which I think is a valid trade. And what you would do, what I would do, is I'd be entering over here, okay, adjusting my position size with about a stop loss down here below 40, and then you can target some of these highs for about 20, 30, 40%, which is about a 2 to 5 risk reward ratio, depending on where you're looking to take profits. And I wanted to make you aware of some of the liquidity caps down here, okay, below that 30 cent level, that if we do manage to come down here, lose this level of support, come into the 34 level, and then we come up here and then we do something like this where we retest some lost levels of support and confirm them as resistance. If we do come any lower for FTM, okay, we do have a key order block over here again at about 25 cent, which is the last area and the last impulsive area before we broke the structure of the market, okay, and really took out those highs of 30 cent, 25 cent, and then when it was off to the races, right? So that is definitely the last stand for FTM. If we start to get a lot of weekly closes and we come back down into the range, okay, then, you know, there's there's a lot more work to be done. And I just wanted to make you aware, guys, that when you're looking at areas of support, okay, so for example, I managed to short some of these levels up here, okay, for FTM, and I managed to join in a long over here at 44 cent, okay. I don't just buy the support, I don't just buy into the order block, okay. I wait for the market to show me, okay, that it is ready to basically show some support at this level. So over here, you can see that we basically got a fake move to the downside from this order block. Okay, order blocks tell you areas of price that you should be looking at to be going long or short, okay, to join the trend. And over here, like I said, when you see these SFP patterns and you see them close back to the upside, that gives you a higher confirmation. So when you see these sort of reaccumulation patterns down the bottom on these areas of support, okay, and you can see these SFP wicks to the downside, okay, that's basically what you're looking for to join into these uptrends. And you know, if we move down into some of these lower levels, okay, don't just buy straight away at that first sign of the order block, so like 35 or 30 cent, okay. You want to wait to see when you see these deviations coming down here, okay, and then you get these SFPs and you get multiple of them and you can see that there's confirmed support. And when you see these levels, this gives you the confluence and the confirmation that you can basically put your stop losses somewhere around here. So you have to be really patient with the market. And that's how I would be looking at entering longs in area of supports for FTM. And bear in mind, the reason that I'm looking at some of these downside targets for FTM as well is that when you see these massive green candles, they nearly always basically give back these gains eventually. And like I said, these are basically like voids in price. So when you get these bodies of the candles, okay, and there's absolutely no wicks in between them, you tend to get retests of these levels. So that's why I'm thinking that we at least come down into 47 cent before we actually move any higher from here. So I think your main levels that you want to be looking out for is the immediate is 47 to 45 cent, which I'll mark out over here. And I think your next levels down below us is going to be the order blocks at about 35 cent. And I think that the last stand for a longer term move in FTM is probably going to be somewhere around this order block at about 26 cent. Any of these areas would be interesting for continuation of FTM to the upside, targeting some of those levels at about $1 that we mentioned in the first half of this video. And I just wanted to make you aware of some of the candle bodies on the weekly time frame. You can see that we're stalling here and we're not actually able to get any closes above 56 cent as the weekly candles in the last 2 weeks have just closed over here and not able to push through with any follow through. So we are getting some wicks here. We do have to wait until the end of the week, but like I said, you can see on the weekly time frame, it's really clear to see where the support is actually coming in. So if we lose this level of support, like I said, where is the next level down below us? It's going to be at about 35, 32 cent, which is going to be this major high over here to probably tag if we lose this low over here. And like I mentioned in the start of the video, you can see that we've stalled here for a very good reason. This is one of the final order blocks, okay, that we actually managed to retest. So there's no surprise why we've actually seen a swift correction over here for FTM. So yeah, let's just be aware of that. And you can see that as Bitcoin has seen a major rejection at that 25k level, don't be surprised that if Bitcoin continues to stall or move a little bit lower here, then you know, FTM can definitely correct further to the downside. As long as Bitcoin is above its bull market support band and above the weekly 21 moving average, okay, I always do see that as a sign of strength and a sign for alts that they usually tend to run. So when Bitcoin is below its weekly 21 moving average, okay, then you tend to see extreme weakness in altcoins and they tend to move lower than Bitcoin. And when Bitcoin is hovering and holding support for a good period of time above that weekly 21 moving average, okay, then you see altcoins tend to push through. So if, as long as Bitcoin can hold that weekly 21 EMA, okay, then I think that there is a shot here where FTM reaches $1. So I hope you got some value from that video. If you did, remember it costs you no time to hit me a like, subscribe to the channel, and let me know down below with where you think FTM is headed next. I'll catch you guys in the next video.